Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
Mike McCormick joins us. Good morning, Mike. How you doing?
I'm doing excellent. Good morning. Happy Wednesday to you, Tom and Shane. Hey, Shane.
Welcome to the house, Mikey.
It's lovely on the soapbox here this morning.
Yeah. Well, hey, we got questions coming in already.
Oh,
got
good
phones,
grief.
phones are ringing off the hook, so let's see what the callers have to say. Caller, you're on the air with Mike McCormick. What's going on?
So I just want to clarify my point from yesterday.
Yes.
When the Republicans squandered their opportunity.
Right.
So how many people across the nation get their news just only from the liberal media, CNN, MSNBC, CBS, the ones that report and just totally bash Trump and say all the bad things they can think of? Those people could have heard the president's defense team refuting, bringing up lies that have been told either in the media or in books or whatever, in newspapers, and refuting them. And some people, oh, Trump's a liar, Trump's bad, he doesn't know what he's doing. Well, the Republicans could have laid out a defense for the president. It's not so much about the impeachment trial for us. It's more like the 2020 election, and they just missed the opportunity to enlighten and bring light to so many things that the Democrats and the media have lied about the president and misled the public. So it's not so much, for myself. I listen to talk radio, so I hear the other side, but so many people don't. And that's, they could have perhaps swayed some independents and maybe some even Democrats. Maybe Trump's not such a bad guy. Huh. Yeah. Well, I never heard this before.
Yeah. I don't know if you heard earlier, I was voicing kind of the same thing earlier because we had several texters talk about you yesterday, if you remember right. I didn't mean to offend you or anything, but apparently the listeners thought I did, and I apologize for anything that I might have said that about your blood pressure.
I didn't think a thing of it.
Well, good. Well, I'm glad. But yeah, I said the same thing earlier in the program this morning that, that they had an opportunity to, as I said, they were speaking to the choir in the Senate. But
the
they
people
had full
outside, media coverage. Yes, a captive audience.
Exactly. Yeah. So why not use your time to really educate the public at large?
Exactly.
And use that time. I agreed with you fully. I think they stopped way short. But I think they probably also thought, well, let's get this thing over with. We got the vote, so I don't know.
Yeah.
But I think it would have helped Trump in the long run. If they would have kept it going.
Yeah, for all the people that don't ever listen to talk radio and hear another side of the story.
Yeah.
Exactly.
All right. Well, thanks for calling back in. I appreciate it.
All righty.
Take care.
Have a good day. Bye.
Okay. Not really on our topic, but that's...
Oh, no.
We wanted to clear that up from yesterday.
This is a community radio station.
That's
here.
right.
Yeah.
So, yeah.
All views welcome here.
Amen.
And I don't want to bend people's minds to focusing on their money. Let's whatever's on your mind is right on.
That's for sure.
Yeah.
Well, the markets, Shane and I have talked about them all week. They've been up, they've been down, they've been everywhere. And this virus thing is, some people think that's affecting it. And particularly if China is...
Now, I'm a little concerned because I drank a lot of Corona in my time.
Yeah, I know.
And I'm wondering if I need
that's
to...
That's it.
I mean, I have...
With Lyme disease.
Yeah, right.
Right. I always did it with Lyme.
That's right.
Where
so you get, not only you get the coronavirus, but you get Lyme disease too.
Pacifico's always actually been my preference. It's very similar unless you have them side by side,
Amen to that.
So this is the scare du jour. And this is the scare du jour. And I get it because I saw Brad Pitt's World War Z, where everybody gets bitten by a zombie.
Right.
And nothing could be more terrifying than that. And I read Michael Crichton's books. David Quammen, I actually didn't read his, but I hear it's similar vein, right?
Yeah.
Where, yes, when things go wrong, they can go really wrong in this. And the reality that we've seen anyway is that there has not been a virus outbreak that has actually gone that far.
Yeah.
There's obviously tragedy. There's obviously concern. There's obviously important measures we need to make. But as my doctor that I was spending the weekend playing with last weekend said, Mike, 60,000 people died of influenza last year in the U.S. alone. So the flu is a real deal.
I was just going to say, if I could, real quick context. Yeah, the Center for Disease Control has announced that nearly 10 million Americans have had the flu virus so far this winter. 10 million. 87,000 have been hospitalized, and 4.8 thousand deaths. So, when you look at that number, the impressive number is how many have been hospitalized. You have enough beds to help them.
Yeah.
But 5.8% of all the deaths nationwide occurred during the week ending January 4th, and most were caused by pneumonia, which is the big concern for this virus. And
that's a news headline that moves markets, right, Shane? I mean, 10 million people that get the flu, they're going to go to the store, they're going to buy whatever they think is going to help them, and that's going to move markets.
That's right.
If you're a cruise line fan, this is an opportunity to buy at the bottom of it because their cruise line bookings have never been higher. People, I was listening to a commentator about it. People typically book cruises out 7 months. It means every consumer's flush. Cruise lines have never done better. I'm not recommending cruise lines as a buy because I'm not an individual stock analyst. But if you are a home gamer, this is one of those headline news things that you shrug off, and that is news. We're in the political season. The news is not reality in many cases. It is entertainment, and it's designed to make emotional reactions out of you. So don't let it affect how your investing goes. I field calls this time of year from both sides. Everybody's worried about what's going to happen. And, I'm not going to say I know what the future is going to bring, but you stay to your course. Here's a classic example. I have a client that is, doesn't have enough to retire, actually. And I took him on as a friendship. And it's one of those things where we said, look, you need to get more aggressive with your assets in order to have the retirement that you want. And we position the rest of his assets and his debt and things so that he'd be able to take more risk in his portfolio. And I get an email from him saying, Mike, I'm really concerned about the market because blah, blah, blah. And I said, actually, we should be excited because there might be an opportunity to get a good deal and make your portfolio more aggressive. Buying low is scary. That's the job that I have, is to say, yes, absolutely, we're worried about this and that and this and that. Yeah. But that's the opportunity. And that's why it's so hard to do. I'm not going to say I'm the best at it, but it is. You have to be a contrarian. As Warren Buffett says, be greedy when others are fearful.
Yeah. Well, we talked about, before we went on the air, we were talking about Tesla, as one that's just outperformed anything anybody ever thought would happen. Yeah. And Facebook is the other one. I mean, it was $13 after they came out and everybody could sell their shares. And, now it's what, 220 something.
Now, I think those are good contrasts, really, Tom, because now Facebook is the company that has real revenue, staggering numbers. Their quarterly revenues are in the billions of dollars. Their earnings came out and they did beat expectations. Now, remember, these analysts come out and they say, hey, we're expecting this company
to do this,
to make this much money. And just like everybody's company, all the small business owners that are listening to this show, they're waiting right now for their bookkeepers to come out and say, hey, you actually made this much. You think, your spreadsheets and your metrics say this, but actually when you sharpen the pencil and count all the pennies, this is what you made. So owners have expectations that are either met or not met.
Or not met.
And the same thing goes on with public companies. And the game that we play is that the companies lower expectations so that they can beat them. About 70% of the time, the companies beat the expectations. And that's what Facebook did. But they only beat by 3 cents. And so that was a sign that maybe they're not that robust. And maybe we have reached peak Facebook because, more importantly, when you peel back the numbers for Facebook, the growing the number of subscribers, of subscriptions, has been flatlining. It has not been accelerating.
Well, when you got the most of the world,
right?
When you got like 3 billion of the 6
Right.
billion, you got half the people in the world on it,
and you're not getting the young ones.
The other thing that happens,
so they might, and we might be at peak Facebook.
We might be, yeah.
Which is an interesting question.
Well, the other thing, they also got hit with a pretty big fine a couple days ago.
Yeah,
$5 billion or so. Shane, do you remember how much they got fined? Facebook.
I don't think it was billion. It was
in the billions.
3.8 million, I think it was. But
was that from our friends over in Europe that did that? Some antitrust thing. Anyway, these companies, they're hit by fines all the time, right?
Yeah.
And they've somehow managed to. I don't actually understand how these companies can absorb these big hits as well as they do. But they continue to soldier on, maybe through insurance, maybe through good planning. And another company that I want to mention that actually has not been able to soldier on through these fines is Wells Fargo. We are still watching the facts come out regarding their the aggressive sales pressures that they put, the illicit account openings that they put down there. Now, these practices have been remedied. I don't want to cast shadow on our local branch here. They do a great job, and if you're happy with your banker, you should absolutely keep doing business with them. But it's more of an eye opener for everybody out there to pay attention.
Mikey, it's their balance sheet. Wells Fargo went deep like 8 years ago into financing fracking oil and gas, and that's their portfolio right now, and it's offside because so many companies, as we've talked, because of the price of oil and natural gas, are not making money. They're making up the difference in production just to keep up with the debt they have with Wells Fargo, and that's why the industry is concerned about Wells Fargo, is their oil debt.
Interesting. Well, that's good to have Shane help us go beneath the headlines. I get that, certainly, and like any business, there's stuff that goes on behind the scenes on that, and it's hard as an investor to predict where to go when you can't get full transparency into those sorts of things. Shane, what's your view on Warren Buffett selling his newspapers to Lee Enterprises? You see that one?
Yeah, I did see that one, and the thing I find fascinating about it is, we're in an age of content, but he's more into an idea of cash flow, as you know. That's what he cares about, and his bottom line is he sees the market as you do, we do. There could be a correction, and he wants to be cash flush, so he wants the cash because he's going to go in and if there's a 10-20% correction, that's possible. He'll be there first. I mean, look what he did to Goldman Sachs. Seriously.
And he picked up, he is a big owner of Wells Fargo as well, ironically.
There you go. Hey, we got to take a quick break, but I got to tell you about the Club Tavern and Grill, voted Bozeman's Choice Best Happy Hour. The Club and Tavern and Grill offers happy hour specials every day of the week. It is one of Bozeman's most popular happy hour spots and sports bars. You'll be sure to find something you'll love from their extensive drink and food menu. They also serve breakfast, lunch, and dinner, and a kid-friendly menu is also available. So to pick up an order or make a reservation for parties 6 or more, go online to theclubtavernandgrill.com, theclubtavernandgrill.com, and check out the Club Tavern and Grill, located in the Best Western Grand Tree on North 7th across from Walmart. It's where the locals go. Tell them Tom and Shane and Mike sent you in. We'll be right back with more right after this. 21 minutes after the hour, Mike McCormick is in the house. Shane Matobin, half man, half amazing, on the line in Vancouver, British Columbia. Tom Eagle off your morning mayor, and this is the KMMS Morning Soapbox with Tom and Shane and Mike today. So from our text line, newspapers are dead.
I enjoy getting our newspaper delivered. I got a great delivery person.
Yeah.
I don't think that Vivian's ever dropped the ball on us.
Oh, yeah?
And it is great to not be looking at a screen. I think,
you like holding the paper in your hand.
It doesn't feel right. I mean, it's,
yeah.
We got teenagers in our house. They're looking at their screens, and you're like, what are they looking at?
Yeah.
If I'm looking at the paper, I'm looking at the paper.
That's why I say, wouldn't it be?
Now, they're just looking at Dad.
Yeah.
It is covered with the newspaper and drinking his orange juice.
Yeah.
So you can't see what they're looking at.
Uh-huh.
Yeah. Dad's sitting there with his pants up around his boobs and having his coffee and his cigar.
Yeah, not the cigar. No. Not allowed to do that anymore. Yeah, although I would have been right there back in the day.
That's true.
I would have been.
Yep, got his socks rolled down,
Yeah, so
He's doing
so
all
print
right.
media is, of course, going the way of the mall.
Right.
However, I just put a subscription out to Outside Magazine too. I want more print media around for that same reason, which is you're focused on that one thing. You're doing the physical act of touching it and opening it. We went to the library, picked up books the other day. I'm not saying, I'm not judging other people, but I do prefer to have a balance. All day long, I'm looking at this giant screen, talking on the phone. It's nice to have a break. Tom even has a notepad here.
Yeah, I do.
And he's writing things down with this thing
What are we
that's a
talking
stick
about?
that ink comes out the other end of it. I don't know what you call that.
I don't know.
Some sort of hieroglyphic.
It's an ad thing.
Yeah. Hey, I did want to put in a little thing about. I like to bring up what I'm talking with clients about. And this week there was a few conversations about real estate. Obviously, real estate has done great in this town, and as I always say, all the money in this town's been made in will be made in real estate. All the money in this town has been made in real estate. There are places where you can get a job and get paid decent, but mostly it's a real estate game. You build it, sell it, loan it. If you want to make a lot of money in Bozeman, Montana, go deep into one of those three things and you'll do fine. That's just how it is. I think real estate's expensive right now. I think Apple and Microsoft are good deals compared to most real estate deals in Bozeman right now. I'm a bit biased, right? It's what I do. I love the liquidity that I can offer people where if they need the money for something else, I can tell them how much is there and I can get it to them right away. You can't do that with real estate. But I do encourage my clients, once they've fully funded their retirement accounts, once they've paid their debt down, have their emergency funds, all those sorts of things, and they have new capital coming in, is there any real estate that you're wanting to have or own a part of that you want to own more of, buy some partners out, things like that? And usually the discussion goes like this. Well, someday we'd like to have a lake house. Okay. Okay, yeah. Well, we just missed this opportunity, but gosh, I wish we'd had it. There was 12 acres on Hauser Lake that a friend said went up for sale and blah, 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 blah. And I said, wait, hold on. You're still 10 years away from retirement. Buying raw land right now is not where I want you to invest your money. There's a big, big difference between a fourplex in Whitehall and 12 acres of non-ag land that you're paying top dollar for. A huge difference. It's night and day. It's like a different type of investment. And so we have a conversation about cash flow. We have a conversation about how to deal with gains in 1031s. And usually it goes pretty well, where they acknowledge that there is no such thing as a property that is both an investment and a vacation home. You either have an investment and you're renting it out, and it might mean that it's getting slumlorded and the kids are spilling bong water all over the carpet. I've had this happen. It's a pain.
Yeah.
But it cash flows beautifully.
Yeah.
Or you have a piece of vacant land and a dream. And I had this too. And that dream, you have to pay taxes on every year.
Yep.
You have to pay maintenance because you got to mow your weeds. And if you're lucky enough to have it in a subdivision, guess what? You get to pay a full boat HOA due every single month on top of it too. And the economics on that are 100% different. So don't cross the beams just like in Ghostbusters. You don't cross the beams.
No.
It's either an investment property and it might sound a lot like a storage unit or a mobile home or a fourplex and, or it's a dream property and you can afford that. So, separate things.
Yeah. Yeah, you buy a piece of property because stuff is going to come up around it and it's going to appreciate in value, but you bite the bullet for the time being until.
Well, and for people that are 10 years out looking at retirement, it's cash flow. Cash flow. And unless they have a construction company or a friend with a construction company that can build on this thing right away and turn it into an income property, which, that means you're building a brand new thing and then you're renting it out.
Yeah.
Then you're probably better off going and just owning a cash flow sort of thing. And the reason why I say cash flow is that my strategy is to help people stay in the market for the growth and defer the taxes on realizing the gains. And so the more income sources that we can put in their pocket, from Social Security to pensions to annuities in some cases, but more importantly to rental income, the less of a drag it puts on their savings that are in the market.
Yeah. When you talk about investment property, or you've got a lot and you want to put something on it to produce income, I assume you're talking about something like a duplex or a fourplex, or
it can be a single family home too, though. but the price, price to value and the management costs and things like that gets different.
Yeah. Well, I was thinking that, with a duplex, it would protect you against one of them being empty. You'd have some cash flow,
Absolutely.
obviously. And the other thing is that with rents, you could probably make a profit and still cover the mortgage, with a duplex, and particularly with a fourplex, because, you could have 4 people in a 2-bedroom fourplex paying $1,000 each, and maybe you're it's $2,000 for that, that property.
Exactly. I mean, scale.
Whatever.
It's your scaling.
It's scale, yeah.
And it takes more money to go in, but that also means it's a smaller pool of people you're competing with.
Exactly right, yeah.
And you get depreciation, you get wonderful tax benefits. I mean, the economy is favored pretty well towards owning real estate, certainly, especially when it's not in your retirement account.
Yeah. Well, Shane can cover that in Vancouver. Real estate there is a what? Are the houses still made of gold there, Shane?
No, market's stalled here.
Yeah, it has.
Is it?
Yeah, there's no foreign buyers because they got hit with a 10% tax.
Oh, your prime minister is at work, huh?
Actually, it was the province. It was our socialist government we have here.
Oh, okay, yeah. When are you going to run for office there in Vancouver?
Not this guy. Remember, we don't talk about high school, so or college.
That's
Not
right.
I, said the cat.
Yeah, that's what I said. I could never run for anything. They will look at my past. Oh my God, that would not be pretty.
That's right.
All right, we're talking with Mike McCormick, McCormick Investment Advisors, and we'll be back with Mike and Shane and myself after the news break here at the bottom of the hour. We got Montana State News, Fox News, and Brady Brewster. She is a bundle of energy with the weather, and we'll be right back with more right after the news, so stay tuned. 24 minutes for the top of the hour. Mike McCormick's in the house. McCormick Financial Advisor. Shane Taubman, half man, half amazing, on the line. And Tommy Galafior, a morning mayor, in the house. From our text line, esteemed financial mavens, what degree of impact will the UK's departure from the European Union, otherwise known as Brexit, or some other Grexit, have on the general global economy? What impact do you see on U.S. stocks in the short term?
You're looking at me.
Well, you're the guest, so
short-term stock calls.
Then we'll go to Shade.
Short-term stock calls require me to play my disclaimer again, so I won't go too deep into that. This, of course, has been what's the term? Like watching the ball drop on New Year's Eve. You think it's actually at some point going to drop, but instead it just sort of moves really slowly, and then it's here. It's not going to. I don't see the upside. I don't see the growth. I was just telling Tom, we got this over the break. I see England as similar to Japan, where they've got tons of assets that are liquid, but not much in the way of things that they can use to grow. They're limiting their population growth by clamping down on immigrants. Their sterling is going to be, Shane can talk about the currencies, but what's the upside for them, right? Now, yes, there'll probably be a good trade deal with us and them. Trump will do it to spur the EU. So there might be some short sort of like euphoria idea. But in the long term, this is a cold island of low population growth. I look at it like Japan. I don't see the upside. There's no natural resources. Most of the financial markets have moved over into Europe or other places in anticipation of that. Their property's been in free fall for a while. There'll be some companies that somehow find a way to make it. But I would, if you're looking for international growth that's in emerging markets, in my mind, that's where there's real opportunity to make some money, as I see it.
Mm-hmm. What do you think, Shane?
2 words: Commonwealth. 32 nations, part of Great Britain. The Queen put it together, and it's principally Africa and the Caribbean, emerging markets. They're all. And so it's huge. It's a great opportunity, as I've said time and time again, for the U.S. to do a treaty with Britain and have a backdoor to all those countries for all kinds of reasons: minerals, population.
And that is where the growth is, right?
And that's where the growth is: Africa, Southeast Asia. So, it's a backdoor to it. And it's the next peg in his plan of readjusting trade routes around the world. Once he has the Chinese trade deal done and the deal with England done, he's going to withdraw from the WTO and put a real board on the back of China with the rest of the world. Incidentally, just for observation, the traders have whacked the yuan. It's broken the $7 mark to the U.S. It's 6.99. The reason that's important, of course, is because of tariffs.
Yeah.
They see that the U.S. is making all this money and nothing's going up in price, so they figure, well, let's make a run at the currency and make several, points. So yeah, it's quite interesting.
Yeah. Well, Mike and I were talking off air, and I agree with you, Shane, that it's more than just making a deal with England. And Mike and I were talking about if you're just going with England, their population is stagnant, their immigration situation is,
limited natural resources.
Yeah, limited natural resources.
Well, but that's been England for 1,000 years.
Yeah, exactly.
Well, it has, but I mean,
But as a financial hub, they really did good work.
Yeah. Yeah, that's the one. Well, banking is the one thing that keeps them, in the forefront. But I agree with Shane. And Boris likes Trump, so
That's right.
I think an agreement would absolutely be happening with that. And again, that puts more pressure on China because it opens up a lot more opportunity for us selling our goods overseas.
Well, and the kicker here is, who does Trump pick as his first player for a trade agreement in the EU? Because he's not going to do a deal with the EU overall. He'll do trade deals with, and it won't be Germany, might be Italy, won't be France, but it could be someone like Poland, where he actually has. And the minute that happens, look out, because you could find the collapse of the euro happen very relative. I mean, it'd take 4 or 5 years, but
no, I agree with you that this is, don't bet on the EU in this point.
Yeah.
No, because Trump is going to redo all the trade agreements around the world. This is just, he's just getting started.
All right, we've got to take another short break here, and Shane, we got a caller waiting. If you want to entertain them and waterboard them, we will be back with more with Mike McCormick, McCormick Financial Advisors, right after this. Welcome back. It's Thursday, January 30th. Mike McCormick, McCormick Financial Services is in the house. Advisors, rather, not services. Well, he gives service.
Hey,
Trust me.
Fine.
He does it,
call
man.
me whatever you like.
He does it all. Shane's got a caller on the line who he deems is worthy of. Caller, you're on the air. What's up?
Well, to show that Daniel R. Peterson is standing outside looking through the window at you guys with his mouth open. I did come across this book by John Vogel called Clash of the Cultures. And he said one culture are the people that are speculating in investment. The others are the old-fashioned, slow investors that just link on to the big companies and wait. Now, I was wondering, McCormick, would you consider yourself on the speculator side or the investment side, or do you even take a stand between these two cultures that are clashing? Here's one interesting quote he said. He quoted from Oscar Wilde. There are people that know the cost of everything but the value of nothing.
All right. Well, we'll have Mike answer that. Thanks for the call. Mike?
Well, thanks for a chance to talk about myself. Jeez,
yeah,
who'd get
go
so
for
lucky?
It.
Nobody that I know has gotten rich investing in stocks. They all got rich by investing in individual companies, usually that they run, but sometimes other people's companies, or in individual real estate portfolios. The stock market is a great place to watch your money go up over the long term by doing nothing, to have liquidity, to have some tax advantages to it. Statistically, active stock management loses money 80% of the time and makes money 20% of the time. I'd rather be on the statistical side of that game. And so when you're talking about a stock show, know that there's a thing called sell-side analysts out there. And sell-side analysts are the ones that you see when you turn on CNBC, when you read the Kiplinger's report, any sort of retirement planning thing, when you get any spiel.
Motley Fool.
Yeah, right. When you see anything about stocks, it's a sell side, meaning that their job is to get you to buy something. And when you walk into the butcher, their job is to have you walk out with meat. And so there's a great graphic that Hightower actually did, another fiduciary firm out there that's much bigger than me. And they said, hey, there's a difference between the dietitian and the butcher. If you're going to the barbecue and you go to the butcher, he's going to set you up with some great meat 100% of the time. If you go to the dietitian, yeah, you might end up with some sausage or some nice lean filet, but you're also going to have some quinoa and some kale chips and a coleslaw as the side. Because that's what your body needs. It needs more than just the one thing. So,
really?
So in the world of investing, know when you're visiting with a butcher, and that, of course, is a graphic vision too, and somebody that is a fiduciary. And all the advisors in town do a great job, and they get this. I always recommend CPAs as being one of the best ballasts. But we are kicking off with not only just election season, but also tax time, and fraud is rampant. So we've got fear from news, we got fearful people from the future, and we've got fraudsters. A lot of F's going on in that one.
Yeah.
And know that when you get a phone call about something, it's probably a robocall. I mean,
yeah,
I hate it. We all hate it,
yeah.
right? I'd vote for anybody that could stop robocalls and get billboards removed from the state of Montana. That's how shallow my personal life is right there. We have a beautiful, beautiful state.
Yeah. Let's not block it out.
Let's not block it out. And over half of the times my phone rings, it's a fraudster. And so look at what's in the mail. If you're getting a phone call that seems to be legit, if you're getting mail that seems to be legit, call your CPA, call your advisor, call somebody you trust, call me, call Tom, call Shane, before you give them any money out there. And sell-side analysts, their job is to sell stuff.
Yeah. Well, Shane was a broker for a number of years. What's your thought on speculation versus investment and whatever, Shane?
Well, it's relative to what your goals are. And all I can tell you is whenever I took a buy order from someone, I asked them, what are you going to sell it at? Like, what's your goal? So, you have to, in my opinion, and I believe was very helpful with my clientele and my business, for them to have an idea if they're going to buy something that has an intrinsic value, they should expect when to sell it. Like, what kind of a loss are you prepared to accept, and what kind of profit are you looking at having? If it's a long-term investment, people ask me, I gave them the same answer I've given on the show constantly. Then buy a dividend stock. If a company can't pay you to own their stock, you long term, I mean 10, 20, 30 years, there's no point in owning it. So there you go.
All right. Tariff question. Tariff right now, $68.4 billion is coming in from tariffs. And our question is, let me go back over to the questions. Let's see. Well, I lost it. There it is. I'll find it in a minute. Anyway, who pays the tariffs, Mike?
Who pays the tariffs?
And does it hurt manufacturers?
Does it hurt manufacturers?
Yeah.
Yes, 3M. The answer is yes. If you ask most of the U.S. manufacturers, they've been in not a bull market, and they would point to tariffs as being a part of it. I think that there's two ways to look at it. One is what's actually happening with the ISM index and the manufacturing and the buying cycle of where people are at. And the other is that, to Shane's earlier point about dividend stocks, I'm a believer in that too. Unfortunately, the past 2 years has been all a growth game. Yeah. Tesla's case in point. Tesla's not going to pay a dividend.
No.
Tesla is a dream and a hope about the future, and they keep going up and up and up and up and up and up.
And Amazon.
Amazon as well. Yeah. Now, Microsoft and Apple used to be in their shoes, and now they pay a dividend.
Yeah.
So there's a maturity that happens, but we are still in a momentum-based economy for growth, and that is leaving the manufacturers behind in terms of their stock valuation. I do think when somebody comes to me with non-IRA money that needs to be a bit safer, absolutely. We're going into dividend value positions for the long term. I am avoiding energy companies. I think that there's really fascinating stuff happening in there, that they are going to be the new zombies of the future. If you have royalties on those, you're going to be fine, because I'll still be putting gasoline in my car.
Yep.
But if you own a share of a publicly traded sin stock, the idea that you're going to find somebody to buy it from you for more is a tough thesis right now.
Yeah, that would be true. What do you think, Shane?
Well, that there's a lot to open up there.
That's how I go. That's how I roll.
Mike is absolutely right about the oil industry. The crude is 52 and Brent is 58. So 65 is not even possible right now unless something major happens.
Shane, I even think there's a dislocation that if oil went up to 70 or 75, there'd be a bump in some of the oil companies, but the buyers would not be there because they're being legislated out of being able to invest in it.
100%. And I think oil could go to $45 the way it's trading right now. Well, gold's up.
Yeah, it went down another 2 cents at the pump, so.
Yeah, well, it says your average price now in U.S. is $1.50, so that's gone up in price. I don't understand that, but anyway.
Well, I think $1.50 is what the station pays. That's not.
I don't pay that.
That's not the normal price. Yeah.
Yeah, the average that gas.
The gas stations pay. It's $1.49. Yeah. Okay.
Anyway, the larger story, I think, right now is how this impeachment issue ends up, because right now you're in a government shutdown, and as long as there's an impeachment trial in place, the Senate cannot do anything else. They have to show up at 1 until whatever time they stop
every day.
Every day from Monday to Saturday. So when you have that kind of a situation, and I mean the global market is a slam. I mean the only stock up in Europe is Sweden. It's up 2 points. Every other index is down. I mean, the FTSE in Italy is down 375 points, and the same in Asia overnight. So, there's alarm bells are going off for a lot of reasons, which, as we said, you can't expect. But I think for going into issues of manufacturing, Trump's proven with tariffs one fact: you don't want to pay a tariff, build a plant in the U.S. and you don't pay tariffs. And it's working. I mean, it's working.
Yeah. All right. We've got to take a quick break. We've got a caller waiting on the line, Shane, if you can chat with them. Mike and I will be right back right after this. We're back. I forgot to put a song in there, Shane. What can I tell you?
Distraction.
Just stupid.
We have Mike. He's the music man. That's good.
Right. Yeah, Mike should have. Yeah, Mike should have brought the guitar in and played a little
not in public.
Interlude there. We are back, and we got a call on the line. Let's go to the phones. 522 Talk is the number. 522-8255. A caller, you're on with Mike McCormick. What's up?
Good morning. I have a question for Mike. You guys are speaking way over my head, and I'd like to know: is there a good read for someone to get involved to start learning more about how to do it? Then I'm listening and I'm going. I have no idea what you're talking about, but yet I want to invest. I'm afraid to invest because I have no clue on how to do it. Well, where would someone start off?
Great question, and thank you. Thanks for bringing it down, because my hope for being here is to help the average person, and the average person doesn't stare at these numbers all day long like I do, and like Shane does too. So I would say, starting big picture, that as we build wealth, we need to have multiple stools, multiple legs of the stool. You have housing, you have cash, and then you have something else. Something else does not have to be stocks. And by stocks, I mean stocks and bonds. Know that there's plenty of very wealthy people in this town that have built wealth and never put a toe into this market. So it is not something that, if you're not involved in, that you need to feel like you should be. When you're beginning investing, my mantra is use a target date index fund. And this is jargon, right? We're using jargon, and jargon's main purpose is to promote experts and make us fees. And that's the big crime of humanity. I'm going to help out with the speech and debate tournament this weekend with a high school. It's the state championship. I'm really looking forward to it. I went to the training last night, and shoot, if this isn't just a jargon-filled little niche thing that they're creating, and so I could go on about that. But we need to disarm the jargon of the world and say a target date index fund is the cornflakes for the beginning investor. It is the way that you could get in for the lowest risk with the least complications. And if you log on to Vanguard or Charles Schwab or whatever beginning investor thing, they're going to direct you to something like that. They're not going to sell you. They want you to have success in investing. They want you to feel like this is working for you. They want you to feel confidence in it. They're not going to try and push you into timing the market. And the biggest beautiful thing is you can start with $10 investing. You can start with $10 a month. I recommend you wait until you can do something more significant like $1,000 beginning and $100 a month. But they can set it all up for you and automate it. And the recommended portfolios that they're going to recommend are probably about right for you. And as you gain confidence, you can use your computer and you can click on the different buttons and the links and learn what's actually under the hood and what's going on. That should hopefully be a good way for everybody to start investing.
All right.
So my answer to the caller is that if you look at Berkshire Hathaway, they have 1.63 million shares out, and Munger and Buffett own 51% of that stock. The reason I say this is for you to understand where my answer to your question comes from. Every year he has a big meeting, and the average holder of Berkshire Hathaway is one share. And, it's trading for $335,000 a share. So he makes a big speech at all of these gatherings every year. So go back, read the last 10 years' speeches that he's made, and you'll get a clear indication of his understanding of the market because he explains it. He'll give you a clear understanding of what he does and why he's done it and been successful. And it's a great way for a great start for somebody that wants to understand the market and maybe how to invest.
Yeah. One of the websites I like, there's one called Investopedia.com, and they have a little thing here that says, what do you need to learn today? And you can search their articles, but they've got all kinds of things on, investing and annuities, marriage and money, best high-yield savings accounts, make the most of your 401k, best advisors for Roths and ETFs and things like that.
So you guys are both right.
Mm-hmm.
But here's the reality, is that's not easy enough. Both of those things require work. And it's not, and not to judge the caller, but the reason why people aren't investing is because they don't want to take the time to do that. Jim Cramer's plan of do an hour of homework on your stock. The reality is people don't want to do that.
Yeah.
And so if my method, I believe, is great for rewarding behavior and encouraging people then to say, hey, well, maybe this is working out. I should probably take the time to go to the lengths that Shane said, to go to the lengths that you said. There's not enough people that are saving. That's really the main problem.
All right. That does it for us, Mikey. Thanks for coming in.
Oh, it's really a pleasure. Thanks for all the feedback and the calls.
Yeah.
Great show. Great to have this in our community.
Yeah. Let's see.
Thanks for being in the house, Mike. We look forward to seeing you.
Shane.
And we look forward to talking to you again next week.
Yeah. And a question you can think about, Mike, is 2.1 GDP a concern with tax cuts? We were promised 6 to 8. I don't think we were ever promised 6 to 8
We were promised 4, but 2.1 with this inflation rate, I love it. It's the slow simmer that's going to keep this market going up. We don't want it to be too hot.
USMCA could put it to 3%.
It could. All right. We'll be back right after this.